Hi guys, thanks for tuning in to another episode of Nuggets News. We're back with our monthly crypto mining update. Our friend Will from MiningStore. How are you today, Will?
Good, Alex, and yourself?
Pretty good. There's been a lot happening in the world of hash rates and altcoins, particularly fees at the moment on Bitcoin and Ethereum. So we've got a lot to get into. Anything off the top of your head, thoughts in general since we last caught up?
No, I think just before we started, we were talking that it's been a bit of a sideways month at the moment. There hasn't been too much excitement compared to the last previous months, but we'll definitely tap into that DeFi space and what it's doing on Uniswap and this ETH network congestion. But other than that, we've been keeping pretty busy on the mining source side. We've just recently expanded out our operations. I'm going to go into a little bit later on the charts showing where we think this next crypto cycle's at and why we are expanding our hosting facilities. But we might tap in at the end of the episode and talk a bit about what that means for mining store community and some of the Nuggets members.
Absolutely. It continues to surprise me how many people out there love mining and have their rigs at home and their solar setups and whatnot. So, other thing that we want to get into today that's been this conspiracy theory is all about the floods in China, and it turns out that it's all very true. We're seeing some evacuations already. We're going to talk about the percentages of the hash rate and areas that are affected by that. But as you said, you guys have got this new cheap electricity, so you're not quite competing with China yet in these hydro dams where it's almost zero cost and they're giving it away. But
Correct.
how did this all come about with you guys getting cheaper electricity?
Yeah, I mean, so since we started our hosting side on the mining store and not just providing rigs to Australia, we obviously have looked to negotiate lower power costs. And generally, how you get lower power costs is by being more of a consumer of energy. And so we had made the decision that we do think we're at the start of a growth cycle, and we're planning on both expanding our operations on the mining side and the communities. And so we have taken on a much larger facility, and that's brought our power costs to as low as $3 per day. So, as I said, not quite competing with some of those 0 to 1 cents, but we are definitely close to a bit under 9 cents per kilowatt hour. At the moment, which is very competitive for the mining side. So, what that has meant for us, I guess, is we do have a lot of excess power now, and we're actually offering both the MiningStore members and we'll extend the offer to the Nuggets community 2.5 months of free power for any new miners that come through, which is exciting. So, 100% return on investment in that period is pretty cool.
Free power. I might have to move my house there as well, mate. We got our power bill with everyone working from home in COVID. It was a bit of a surprise. But you talk about the cycle, and I guess we're all pretty excited. We've seen this chart. We're going through this phase where everyone's excited about the next boom and how high are we going to go. What are your thoughts on this chart related to mining?
I mean, look, it is one of those periods of time, when everything's kind of coming up and it's getting exciting, and people are constantly asking that question to themselves, should I take some profits out here? And I constantly say to all my members and broader community, like, you don't go broke taking profits. But at the end of the day, Alex, I mean, you and I covered this on the recent downturn. You can never lose your full exposure to the market. And so, relating that back to this chart here, ever since this is divided into the halving, and we can see the third halving that just came recently. And basically, what tends to happen with the Bitcoin cycle and relates to the larger market cycle is we go on these declines, which is related by those red boxes. We get a small expansion phase by a smaller expansion phase, and then we kind of trade sideways for a bit, and then we get this parabolic growth cycle again. So, technically, just after the halving, we are at that parabolic section again where we're about to go into that growth phase. So what that means for mining is, and we'll look at the Bitcoin production rate on the next chart. But even though some of the bigger Bitcoin miners are producing Bitcoin at a loss, technically, it's costing them more to produce one Bitcoin in a year than they could just buy. What they're kind of looking at is, well, as this price expands, when it gets parabolic, they've already got their foundation set up to be, accruing as much Bitcoin as possible from the market. So, yeah, I mean, sometimes you've got to look 5 or 10 steps ahead and not just think, what am I earning today? And is there actually going to be enough supply of hardware when the returns, start getting much higher? And that's what we've kind of anticipated with our hosting expansion as well.
Yes, and I remember in the last cycle, everything was sold out. ASICs, GPU cards. Like it was
Good
is
good luck.
a bubble itself. Everyone wanting to mine crypto, and we've got the hash rate on screen here. And I think last month or the one before we were talking about the hash rate index and price, and I was saying I think price is going to catch up, and or hash rate is going to fall, or they're going to meet somewhere in the middle. But I
Mm.
think hash rates kept going up. But if you had have put on that trade, it was still a winner because the Bitcoin price has just kept powering higher, and it tends to follow hash rate. I believe anyway. What do you believe?
Yeah, well, I mean, I think like the answer to that question is literally in these two charts, and it's exactly what you said. Either price needs to come up or the hash rate needs to come down. And as you can see on the chart on the right, the hash rate is not coming down. We're about to go into a couple of slides about China and the floods that are occurring there and the instability of some hosting facilities needing to shut down, and yet hash rate is still pushing up. So what that really tells me, I mean, if we just break down the chart on the left, which we've done in previous episodes, and most viewers probably understand it by now, but that red area above Bitcoin's price is basically that total cost of production, which is sitting at around 16,000 US dollars to produce one Bitcoin a year. But the price of Bitcoin's only at $11,000. So for Bitcoin miners to warrant to keep their miners online, that price needs to either come up or people on the network who are mining need to drop off. We need to see less competition, miners turning off. It doesn't look like miners are turning off. They're obviously very confident based on what I was explaining in the previous slide that we're looking long term. We want to expand in these markets. We're okay with breaking even as long as we've got those facilities set up and we have the miners to take advantage of when things do take off. So that's personally the way that I see it. I know from my connections at China and even Russia and all around the world, miners are fairly bullish at the moment. And we're, despite what might be showing on price that we're earning lower, we're looking those steps ahead. So yeah, I honestly think that price will come up for that exact reason. And we will follow that kind of parabolic phase on Bitcoin's price, pushing closer to 20 to 25,000.
Yeah, and it almost becomes a self fulfilling prophecy as more and more miners hodl. There's less selling, and they're helping the price catch up to that hash rate. So, look, let's
Definitely.
get into this the dam. So we spoke last month, and I think we're a little bit uncertain, and we might have even thought that it wasn't in that area. It wasn't going to be too affected, but there's more information come out that if this does get bad, it is an area where there is actually quite a bit of hash rate.
Yeah, absolutely. I mean, it's scary stuff, and just to reflect on, what's actually going on there outside of what the effect is on the hash rate. There's 744,000 people have been displaced. There's 63 million people affected by the current level of floods from this rainfall season in China. But the major concern really surrounds around this dam wall, the Three Gorge Dam, and that is located in Sichuan, just east of Sichuan. And if we have a look at that map down there, that geographic map on the bottom right, what you can see, that big blue circle is where Sichuan is, and that's where a lot of the Bitcoin network hash rate is actually situated. Of course, there's other areas in China. There's some north up in the hills as well, and there's obviously some in America and Russia and all over around the world. But the largest portion is in that area. So as you've probably, I think you covered it early, Alex. You're one of the first posts I actually saw, talking about this Three Gorge Dam, and there is people speculating that it is potentially under structural constraint and it could collapse. Whether that'll happen or not, obviously the authorities over in China have said that it won't. But there are some pretty scary videos available online if you actually look into what would happen to the landmass and how much of China would flood in South China if that did collapse. And I'm more than sure a lot of those facilities will have Bitcoin mining around there. So from what I've heard from kind of inside wide, anyone that I know that has hosting facilities over in China, they are more up in the north. They're not hosted around Sichuan. So that's obviously good news for the people we know, but that's not to say that everyone is hosted more north there. So yeah, I mean, it's a catastrophic event. You can never turn your blind eye to what could happen, and it just shows that there does need to be a bit more decentralization in the hosting of hash rate and not keeping it so concentrated in China, I suppose.
Yeah, and it's important to differentiate the hosting facilities, the mining pools that people can join is the software component, and then there's the hardware, which is all the actual rigs and the dams and the that's very different as well. And both of them are better to be more decentralized. And we've seen it again this month with the headlines: more American companies going hard after the hash rate. Political uprisings in Iran and some of the miners going offline. So this is becoming a geopolitical, like gold mining, and we do in our commodities
Yeah.
update, and it's about the banks and all that. It's funny how there's always politics involved in something like crypto, but
Yeah, of course.
I,
But I mean, I think if we compare these stats back to, early days in Bitcoin mining, it was high as 80% in China, and probably a lot of that in certain areas of China as well. So it is definitely kind of dispersing out. We are getting more decentralized, but nevertheless, when these kind of catastrophic events happen, it can cause a bit of concerns as to how much of the network could be damaged.
Yeah, and everyone's kind of waiting to see if we get another dip, and I'm kind of starting to lean towards the fact that we won't unless we get an event like this, and that would be the event where the news cycle is going to take over. There's going to be that much fear and FUD, and price could really, really crash, and that would be your opportunity to buy some cheap coins. But unless we get a stock market crash or something, a bit of a black swan, I guess, I don't foresee a deep correction. People that are hoping that they're going to get to buy in well below 10K. I don't know. I just don't see that happening. What about you?
Yeah, look, I really don't either. For me, the biggest risk on effect will be the stock market, unfortunately, and just a global liquidity pinch again. We saw what happened when, COVID came quite rife in the States and abroad. And unfortunately, that's what happens. If the stock market crashes, people have money in certain areas and they need to, facilitate margin positions or potentially buy more back of what they've bought. And unfortunately, that can lead to them selling off some higher risk assets, such as cryptocurrencies. So that's probably the biggest risk on, I think, in terms of keeping everything separate and not worrying about global liquidity and global markets. I honestly think there's been no better case for Bitcoin and cryptocurrency. People are getting less and less trust, or they're starting to be more educated of the downfalls of the traditional financial system, and they are looking for alternatives and more control of their finances. So yeah, I would tend to agree with you, Alex. I think Bitcoin's probably going to hold this value, and fundamentally, as I've outlined by those Bitcoin production rates, I think that it should be closer to the 15 to 20,000.
Yeah. Now, one of the things that could affect both of these blue chips, Bitcoin and Ethereum, is if they get congested to the point where it's unusable, and we don't want $30, $50 fees on Bitcoin and Ethereum. So we've seen these charts you've got up. DEX volumes are going through the roof. They're now doing more than Coinbase and Kraken on some days. But it is getting very expensive, particularly if you're using a smart contract, guys, that's actually doing 3 or 4 things on the back end, and you're having to pay $120 to do your yield farming or just to claim your rewards. That is something that we need to solve. So, do you want to talk about that from the mining side of things, Will?
Yeah, absolutely. I mean, it's been a long time since I've appreciated the old GPU miner. But these GPU miners during this high level of congestion have been earning $10 plus per day. And I think a large reason surrounding why there hasn't been, I suppose, enough network hash power to facilitate this level of congestion is a little bit to do with that kind of gap that we're going between Ethereum going from operating on proof of work to going on to proof of stake. Had they, and it's not a problem, it's just a part of a transition. But had people have been more confident that proof of work is going to be around for the next 3, 4, 5 years, I think a lot of people would have invested into these ASIC miners, and there would have been a lot more competition around the network to obviously facilitate those transactions. So, I mean, I think looking 1, 2, 3 years ahead, and when we move towards 2.0 and get into this staking and sharding type operation. I do think that these problems hopefully will be solved going forward. But yeah, just to relate back to the Ethereum gas prices, it was pretty ridiculous. Even just a basic transaction was coming at about $20. I think we haven't really done memes of the month, but I found this one quite funny. It's referring to people trying to engage on decentralized exchanges like Uniswap and putting a transaction through, and it keeps failing because there's slippage in terms of the transaction fees. So
Mm.
yeah, I mean, it's an interesting space. I'm really looking forward to that move towards Ethereum 2.0, to be honest. And I think it needs to happen anytime soon. We've got some slides on the next ones, but what are your thoughts around Ethereum 2.0 and what's going on with the congestion, Alex?
Yeah, to me, it's funny that I want people to understand that the more computers doesn't mean you can process more transactions. That's not what is going to help the congestion. It's the fact that when it gets congested like this and hash rate can kind of dwindle and drop a little bit, then it's more the, well, particularly with Bitcoin, it's when those block times start to just extend a little bit, and it's the opposite when we have more hash rate coming on time and the block times start to compress a little bit until the algorithms adjust. But I know that works a little bit differently with Bitcoin. So again, I'm just trying to put the pieces together. Why is it that those older GPUs are now more profitable?
So at the end of the day, you know, there's a network, right? And there's a certain amount of hash power to facilitate that. And, at the end of the day, people don't realize it as much. If I want to send you Ethereum and, there's different times, I can set, say, 80 GWEI, I'm willing to pay 80 gas fee. If I want that to happen faster, then I need to increase the gas fee that I'm going to pay. And so essentially it's the kind of in the miner's control. If there's 1,000 transactions that are waiting to be happen and they can only process a certain amount of them, then they're basically going to say, well, if you want us to transact yours before someone else's, then you got to pay a higher fee.
Yeah, yeah,
And
no.
so,
I do understand all that. It's more just I think in Ethereum, the average miner, the average GPU can turn on their card and there's a lot more fees in each block, and it's easier for you to get a percentage of that versus if you've got an average computer, an old ASIC, and you turn that on when Bitcoin's really high and has high fees, it's harder to compete with you because the new ASICs are like an order of magnitude better. Am I thinking about that right?
to a degree, at the end of the day, it's basically just comes down to the amount of hash power that you're contributing to the network. If I'm only contributing with a GPU miner 26 mega hashes, but ASIC is contributing 100, then they're going to get a higher portion of the reward. So I think that's potentially what you're referring to there. And to relate that back to why GPUs are earning more right now, it's simply because, there's been such people willing to pay such high gas fees to get those transactions to go through that with only 26 mega hashes, you can actually now earn a higher reward.
Yeah, so in each block there might have been a few ETH, like 2 ETH is the reward, and they're talking about dropping that to half or one. But the trade off here, and the reason it's still so secure, is because all these fees. So maybe there was $10 of fees in an Ethereum block a year ago. Now
Correct.
there's $1,000 of fees, and so that old card is becoming profitable, and that I think that is adding to the security and the confidence, and that's why they want to reduce the block reward as well. But that definitely is just, as you say, it's all sort of temporary because we're going to Ethereum 2.0. That is going to take time. My thoughts on all of this is it's very exciting that the average person will be able to get involved, because if you don't want to outlay on that hardware, particularly with Bitcoin, and you can't afford an ASIC miner, or you don't have cheap power, that all sort of goes out the window now. And as long as you've got a half decent computer and okay internet connection, if you want to run like a full node, you do need some hard drive space to download that blockchain. But that's all very easy to do now that it's switching to stake and locking up your coins.
I think, yeah, exactly right. I mean, it's funny because we're going to start getting into that debate section of proof of work, proof of stake, and that's one of the next slides. But I do think that the only thing that I would say on that level is, although it can be easier to set up a proof of stake node and you can get a third party to do it, the age-old debate is that, someone needs to have 32 Ethereum, and not everyone can afford that amount unless you're using some kind of, community. You're pooling your funds together and contributing that way through a third party. But for someone just to, the way that I was introduced to blockchain, just to be able to turn on my computer that I personally built for computer gaming and work in high school, and be able to just turn on whether it's nice hash or whatever, and contribute to a network and earn a little bit of money. It might be a huge amount of money, but that level of participation is something that I quite like about the proof of work side. So
Mm.
I mean, as I said, we'll jump into some of the advantages and disadvantages of proof of work versus proof of stake, and break down, what they're both trying to achieve. But yeah, I just think that level is kind of going to be missed a little bit on the Ethereum side. Just being able to turn on a really basic piece of hardware, you're not going to earn a large amount, but you can still participate.
Um, yeah, I mean, hopefully with like Rocket Pool and some of these other ones, it's going to be very easy. So if you only have one ETH, you can still just click a button and join Rocket Pool and do that and contribute. So that's where I'm hoping that does solve that problem. But on this slide here, you've got you might even be able to do this with a Raspberry Pi, which is just like almost looks like a circuit board, isn't it? It's just a super basic computer.
Yeah, I mean, like anyone that's getting into basic coding or basic, they're looking to understand hardware a little bit more. Raspberry Pi, I have probably one in the cupboard, but I won't go and grab it in case it's not there. It's a tiny little piece of hardware, and it's just pretty much a really small motherboard that can perform some pretty cool things on a coding base. So, in terms of from the announcement coming out from Ethereum at the moment, it's sounding like the team is actually, doing this in a way that anyone with just a very basic piece of hardware, it's not like you have to go and buy a $2,000 or $3,000 piece of hardware, just a very basic $50 piece of hardware that has stable internet connection. You can actually host your node on that Raspberry Pi, for example. So I think that's really cool. That's the way I really wanted to see it happen. Relating back to that example that we were just talking about, Alex, that we want to see people be able to at least participate without risking too much or contributing too much. Just being might not be earning a lot of money, but just being able to participate. I think that's a really good thing. At the end of the day, you'll still need to have a little bit of a basic understanding of how to set up some software, and then have the 32 Ethereum to actually stake on the validator node to earn. But yeah, I'm glad to hear that it is going to be more of a basic level of hardware. I think the reason why that makes me happy is because if you start getting into, you need more CPU or storage space to do this, a lot of what that just leads to is people going for cloud solutions and just going with, big providers like Hetzner, Volta, and essentially just using server providers. And then you've just got all these nodes being hosted in the one place, and it's not geographically decentralized. If a flood wipes out that whole database, or whatever it is, then all of the network, kind of becomes very unstable. So really good to hear that Ethereum is going down that approach, and really what it's going to come to if you want to participate is just having that 32 Ethereum.
And recently we heard that like Amazon Web Services had some malware on them that were getting people to mine what was it, I think Monero. So you just never know what's quite on those cloud services, and that's like defeating the whole point of decentralization. So small devices like a Raspberry Pi also mean that it's more likely to be able to run a node on your phone in the future, or all the little Internet of Things devices. So that's where the team want to get that with what they call light clients. But let's dive into this proof of stake versus proof of work debate. We've kind of touched on things already. There's a lot of points on here, Will. I mean, the age-old, the big one is power versus far more energy efficient. Now, people say power consumption is good because it's what secures Bitcoin and it's renewable. So where do you fall on that scale, and what do you think are just the big pros and cons? And we might let people pause it and read through them all. But yeah.
I don't think we'll go through them all, but just in case, someone in their head is trying to conceptually understand which side of the fence they sit on, you can basically just look at the advantages on the proof of stake side and then say, well, look at the disadvantages on the proof of work side, and which one outweighs the other. But I think it's important to understand what is actually trying to be achieved here. A lot of people don't understand like why we need proof of work or why we need proof of stake. So the main reason for that is it's a way of achieving decentralized storage of information and validating information for a start, which is something that we've covered and you've covered in great detail, Alex. It's a way of achieving on-chain communication. So these, whether it's proof of stake or proof of work, they're both different types of nodes, and essentially they are validating information with each other, but just in a different way. And then the final one is obviously achieving security. Without having these high power costs, or without having this, high level of stake, like 32 Ethereum's like quite a large amount of money, almost one Bitcoin, 11,000 US dollars worth. If you're staking 32 Ethereum on the network, you probably want to be acting in a good way and incentivizing the network rather than trying to, accrue a whole amount of 32 Ethereum nodes and attacking the network. You're going to lose a lot of money by staking. So I think, as you said, Alex, that the main headline title that you commonly see as a disadvantage of the proof of work side is it's not environmentally friendly. A lot of people don't like the fact that there's so much hardware, and you would have seen photos in various countries of just piles and piles of old generation hardware that's not being used anymore, as well as the amount of electricity pumping out to keep these networks alive, is a really downside of the proof of work side. But then, on the other side, a big downside of proof of stake, I personally think, is you're not really achieving pure or decentralization. You've got a lot of these nodes being hosted on these servers, like we say. You've got a lot of those coins being hosted on third-party platforms, even or exchanges, and getting soft staking rewards. And so you're not really dispersing where the control of the network lies. So
Mm.
what are your main points there, Alex? Do you swing to one side or the other? Do you think a hybrid model is what really achieves it? What are your major thoughts?
Well, I think no one's done it perfectly yet, because you can use that argument about how much of the hash rate and mining pools are still coming from China. And in an ideal world, I'd love that to be a more even split across, say 5 continents or something like that. I want us to continue to get towards 100% renewable. So I'd love to see hydro in China, huge solar farms in Australia, geothermal in Northern Europe, wind somewhere else. So look, that's where I'd love Bitcoin to get to. And that way it doesn't matter if it's the biggest energy consumer in the world and bigger than all the countries, if it's 100% renewable. As you say with proof of stake, we don't want it to be all these people hosting them on servers and no one can afford 32 ETH. But I think we are going to solve that by people being able to easily join Rocket Pool or similar services with their 1 ETH. And making it easy for them to do that as well, with tutorials that I'm going to obviously do, so that people don't end up putting it on Binance to stake their coins, and that just defeats that whole purpose. So look, an ideal world, let's hope that both networks are pretty decentralized, say a year from now.
Mm. Yeah, and I think that one point that you made there, Alex, about we want to see on the proof of work side, things being geographically decentralized. One of the projects that I believe is doing this the best, and before I go into, we're actually looking to launch our own coin, which will be pure decentralized, and this project particularly I've looked into a lot, and how they're achieving this, but it's Digibyte. Digibyte has a multi-algo blockchain. So it doesn't just have, say, SHA-256 for Bitcoin network. It's got a multi-algo platform. And what that means is you can design each one of those algorithms to be more beneficial to different types of parties that are engaging with it. So you might have one of them that's, the classic SHA-256 sector, and it's, favored towards people with cheap electricity and low hardware costs, which tends to be China. But you might have another section of it which could actually be a hybrid proof of work and proof of stake, where you actually need to stake a large amount of coins to even be able to mine on the project. And
Mm.
that kind of gets the best of both worlds. So I think these multi algos for proof of work is a really interesting concept, and creating that decentralization globally, by having different algos which benefit different parties, is a really cool way of going about things. And it's one of the main reasons why I have personally a large amount of investment through my FPGA mining farm in Digibyte, and something I think people should be aware of.
Yeah, I think if you don't do something different, then you just get 51% attack 3 times like Ethereum Classic. And to me, that is a dead chain unless it was supported by Grayscale and some of the big boys. But anyway, let's not get too political. So that's everything for this month. Reminder that you guys have got that free power offer for new miners until the 31st of October. The links are down below for you guys to get a discount as well. Very interesting to see if these fees kick up again if we have a bull market. And I just can't wait to see what happens with price, because it feels like we're just consolidating before the next leg higher.
I definitely agree there, Alex. I think next month or two, as I said, the only risk I see is on the stock market, which is unfortunate, but that's reality. So yeah, I think I hope to see another leg up. And yeah, for those people that are looking to get into the mining side of things, we're very big on educating people, and we're pretty honest with people if their expectations are too high, that they think that this is kind of a get rich quick scheme or something they're going to make a lot of money out of. We tell them straight out. But nevertheless, we've helped out a lot of people recently. And I suppose, yeah, no better opportunity than getting free power for 2.5 months to get involved. So reach out if you're interested. But if there's anything that people want us to cover in the next month's episode, leave it in the description below, I guess. But yeah, good episode, Alex, and all the best for the next month.
Yeah, thanks for joining us, Will. Hope you guys have enjoyed that one. Smash the like button, and we'll see you next month. Cheers.
Take care.